Good morning. It's Jeffrey Christian of CPM Group. It's 11:40 in the morning here in New York on Friday, the 16th of January. This is going to be a little bit of a longish video. There are a lot of topics I want to talk about. I want to dig into silver, what's really been going on, and some of the things that haven't actually been going on but have caused investors to buy silver predicated on the belief that things are going on. I will apologize up front. I'm not going to spend as much time on the fundamentals as I have. Those of you who have gotten the special market commentary we did in December on gold and silver and the renaissance in investment demand and the factors behind that, that explains a lot of the fundamentals, as do other reports that CPM Group does. I'm really going to be responding to some of the comments and questions that people had. Some really good, thoughtful, intelligent questions and comments, and some not so much. But let's first talk about the markets. Gold prices right now are $4,599, according to the Comex. Almost $4,600. It actually got over that briefly over the last couple days. Again, it is investment demand. Gold is actually off about $25 now. It was off about $40 earlier in the day. Continue all of the precious metals, copper, aluminum, continue to be extremely volatile. This is reflecting investment demand. I'll show you some data on investment demand in the first 2 weeks of January for September later in this video, and you can see similar patterns are occurring in gold and other commodities. Our expectation is that the volatility will continue and prices will continue to be strong because the world's not getting better, it's getting worse. Silver prices, as we speak, $88.56 for the active March contract. Again, very volatile. It's off about $3.80 right now. It was off more than $5 earlier today. Again, profit taking following very strong prices moves up yesterday. And that's the way the markets have been working. Platinum prices also off today, $108 off as we speak at $2,302. That's record levels, record prices. You can see that on the right-hand side. The previous record in the first quarter of 2008 has been surpassed in the last several trading days. And we're going to expect a little bit of there. And there was a question or a comment about platinum, which I'll address later in this presentation. And finally, palladium prices. Palladium prices, unlike platinum prices, have not reached record levels. They got very high in February and March of 2022 after Russia invaded Ukraine. They haven't gotten that high yet again, but they have risen very sharply. They're off about $58 right now. There is some expectation that greater palladium demand will be forthcoming from the auto industry, and the South African Producers Marketing Agency is heavily promoting the idea that platinum and palladium have all sorts of new uses, many of which will probably never be commercialized. So one of the questions was, I wanted to ask what you meant in your video when you said one has to be worried about the period of potential profit taking on the part of short-term investors. I'll show you some data in a minute about it. But basically, when the price rises, sometimes investors take profits. You're not, there's an adage that mining promoters and miners talk amongst themselves. They'll say, you're not a mining executive until you've sold a gold mine. It's one thing to buy or build a gold mine, but you want to sell it. And there are people who will tell you, I'm not an investor, I'm a stacker. Well, stacking is a form of investment, whether you realize it or not. But that said, investors buy and sell metal. And one of the things that we've seen since August has been an enormous increase in short-term investors who are not traditional physical gold and silver investors. I showed you some data in recent videos of the massive increase in ETF purchases of silver, platinum, and palladium since August by investors. And those investors, many of them are not traditional investors. They are momentum traders. They're opportunistic or speculative, if you will. People use both of those terms as pejoratives. I'm not necessarily sure that they should be pejorative. But these are people who are not long-term gold and silver holders, or in many cases, they are long-term gold and silver holders, but they're also shorter-term investors. Our recommendation to our clients has always been that that's what you should do. You should have a core physical holding of gold and silver, possibly platinum or palladium, depending on who you are and what your wealth and investment profile is. But in addition to that core investment position or wealth diversification position, you should also be buying and selling metal on a shorter term, by which we mean either from 1 week to 3 to 5 years position. We'll hope to talk later this year about the fact that sovereign wealth funds are not central banks. We think that one of the problems in the gold market is that people are glomming sovereign wealth fund purchases of gold in with central banks in order to say that central banks are buying more gold than they actually are. Central banks are long-term buyers of gold, and they hold it as a monetary reserve asset, as a portfolio diversifier for their foreign exchange holdings. Sovereign wealth funds are institutional investors. They have between 1 and a 5-year investment horizon. When they say, I want to buy gold, they're saying, I plan to sell this at some point within the next 1 to 5 years, depending on market conditions as well as my own portfolio. Sovereign wealth funds are not central banks. Non-traditional investors are not long-term buyers and holders of physical metal. It's very important to understand. And when they see the price rise very high, they will take profits. Now, some long-term investors do too. There's a guy, James Sinclair, the original gold bug. He helped promote the idea of allowing gold ownership in the United States when it was illegal in the late 60s, early 70s. He was a prolific writer. He was a great friend. He passed away a few years ago. James, in the mid-70s, after the gold price had risen up to about $190 and fallen back down, people were saying gold is dead. And James said, no, I think it's going to be $860 at some point. It got up to $850 in early 1980, and he sold his position. And people were like, what are you doing? You said that it would get to $860 and it's here. And he said, yes, it did. Now, the gold price touched $849 or something in that one day in 1980. The next day, it fell $143. That was the biggest one-day move in gold prices on record until 2013. Silver prices touched $49 and some odd cents at the same time in 1980. They were $38 the next day. They touched $49 and some odd cents at the end of April 2011. They were $32 within 5 days. That decline has to do partly with profit taking from short-term investors. And you got to watch out for it when the prices are as high as they are right now. In fact, you're seeing some of it right now. I'll show you in a minute. This is the silver price. And I was thinking about this is the silver price since 1975. And I was thinking of showing you a whole bunch of other charts, but I have so many slides already today. But you can see the silver price spikes up these are monthly average prices. Silver price spikes up to $36 on a monthly average basis in early 1980. It gets up to $50 on an intraday basis. And within 2 months, the silver price was $10.80. Similar decline 2011, 2012, 2013. And here we are, the monthly average last month was $65, and the price today is $88, having gotten up to around $92. Do you think it's going to stay up there? Do you think that 19 billion ounces of known silver mineable reserves will not be developed? Do you think that the 540 some odd million ounces that CPM Group listed in its silver yearbook this year in 2025, we had about 24 silver mine development programs with about 540 million ounces of annual production that we had listed as probably coming on stream beyond 2026. Now, it could take 10 or 20 years for some of those mines to come on stream, but these are things that have been known and have been under development in various levels for years. They're not 20 years away. They're maybe 5 years away, or maybe even less. Do you think that all of that scrap, all that silver inventory in jewelry and decorative items is not going to be, some of it's not going to be sold because the price has gone from $30 3 months ago to $90 today? And do you think that fabricators are not going to reduce their silver use as much as possible? They're not going to go to silver-plated copper? They're not going to go to copper? And do you think that all those investors who have bought that silver, who own several billion ounces of silver, that some of them may not say, hey, I think I'm going to sell it? You know, we had an associate that we know who was selling silver at $77 a couple weeks ago. Prices go up and down. And I was going to show you soybeans, oil, and other commodities because they all have similar price patterns. It's not because of some conspiracy. It's not manipulation. Yeah, you got to be drinking Kool-Aid or listening to Palantir or something to believe that stuff. It's the way markets work. And that's profit-taking. Investors bought a lot of silver ETFs in December and in the full year. Last December, they bought 37.9 million ounces of silver. Last year, they bought 203 million ounces of silver. In the ETFs at the end of last month, December 2025, they had 1.2 billion ounces of silver. Investors bought 18.6%, or the equivalent of, total newly refined silver supply in 2025. And you can see that compares to being net sellers 2022, 2023, and oftentimes buying and accounting for less than 10%, far less than 10% of the newly refined silver coming into the market in any given year. The big one was back in 2020 when they bought more than a third, or roughly a third, of the market. And last year they bought 18.6% of newly refined silver supply. That's why the silver price rose. And anybody who tells you differently is not aware of what the silver market is. Now, these are silver ETF holdings in the first 15 days of the year. Remember, I said we got the 1.2 billion ounces at the end of December. And on December 31st, investors sold 265,000 ounces of silver. Now, to be honest, and even more elaborate, because we can go on forever talking about the physical silver market, on the 30th of December, they bought 15 million ounces. But somebody sold a couple percentage of that the next day, rounding off the thing. 203 million ounces bought last year. Red represents net declines, net sales. And you can see that we've had 4 days this year when investors were adding to their silver ETFs. And we've had 7 days when they've been selling. The zeros represent weekends. And you can see that they sold 6.9 million ounces on January 1st. And so far, in the first half of a month, they've sold 15.8 million ounces. That's what I meant when I said you have to be concerned about the effect on driving prices down of short-term investors selling. They haven't been driving the price down yet, although I guess you could say the decline from $92 this morning to a low of $86 at one point could represent them selling. Of course it does. But they haven't driven the price, as I said, 1980, $50 to $38, 2011, $50 to $32. But investors often sell. Now, another comment. My local dealer here, and I didn't want to say where he was, took in 15,000 ounces of generic silver over the weekend. Okay, these are investors selling generic silver back to the dealer. And he sells it to a wholesaler or directly to a refinery. Sounds to me like this dealer is selling directly to a refinery. And so the investor who wrote this said one major refinery is buying, but they've lowered their purchase price to $15 under spot for generic silver. That's in line with what we saw in the period up to August, up to September, the last week of August, when we had the dealers, a lot of wholesale and retail dealers are saying we don't have enough cash to buy as much generic silver as investors are coming in and trying to sell. We're net buyers of silver from investors. We're not selling investors. As the price of silver was rising, they were buying silver back from investors who were taking profits. That changed at the end of August, and it has continued to change. We saw a lot of investor buying from September through December, and now you're seeing gross sales again. That major refinery is charging a payment terms of 3 to 5 weeks, up from the more typical 2 weeks. And they've lowered the threshold of scrap sterling silver that they're purchasing, their normal feed during normal price periods in silver, from 1,000 ounces per week to 250 ounces per week, because they're backed up. Another smaller refinery, he said, wrote, has stopped accepting scrap silver entirely, and generic silver as well. Silver eagles are still in demand, as are maple leafs. So these are the same conditions we saw really in parts of 2022, 2023, 2024, into the late August of this year, of 2025. When gross investor selling overwhelmed the retail and wholesale dealers and the markets and backed up the refineries, converting smaller investor products into good delivery 1,000-ounce bars, which is what they need to sell into the market unless they can find wholesale or retail dealers who want to buy something that's not good delivery 1,000-ounce bars. Same person had this question, I believe. As of the writing this email, spot silver was roughly $91 in New York, and Shanghai spot was plus $100. With the Comex having high levels of silver on hand, wouldn't it be feasible for players within the market to buy physical silver here and to the U.S. and ship it into Shanghai and make money on the spread? Well, it would be feasible for them to do it physically, but they wouldn't make money on the spread. First off, there's a 17% import duty that you pay importing silver into China. The United States, by the way, doesn't have an import duty on silver right now yet. I'm pretty sure we haven't imposed it. And we have, China has a 13% VAT. The Shanghai price has the 13% value added tax included. Now, I'm not well, I am a math whiz, but that's beside the point. But you've got less than 13% between $91 and $100. So the question is, why is Shanghai trading at a discount adjusted for the value added tax to New York? There's several answers that all combine. One is that there's more supply right now than demand in China, exacerbated by the tightening of export regulations, which is, by the way, no big deal. It's a normal practice. And every 2 years, the Chinese government goes through the companies that have export licenses and review and renew them. Right? The other thing is there's global, these are different markets. And that's very important to some of the other things that I'm going to try to explain that most people, I think, understand, but there are some people who seem to have some comprehension problems. Comex is a global market trading 5,000 ounce units, and they're available for everybody to trade, and everybody does trade it. Investors in China, institutional investors in China, individual investors in China, in India, in Malaysia, in Indonesia, in Latin America, in North America, people around the world, and banks and brokers and miners and refiners trade Comex. And they trade in 5,000 ounce lots. The Shanghai Futures Exchange is a professional exchange that is really available for banks, institutional investors, and dealers. It trades 15 kilograms, which is about 482 ounces. So it's about slightly less than 1/10 the size of a Comex unit. They're different markets completely. And you would expect different prices. I remember back in 2008, I went and found the price of an 8-ounce can of cocoa. And I had to explain to people that, you're looking at wholesale and retail silver prices. And if you applied the same logic that they should be the same, which is what some people were saying in 2008 about silver, to cocoa, the price of a can, the retail price of a can of cocoa, and cocoa was trading, I think, in 1-ton units on the exchange at the time, would have been like $67,000 instead of $1,200. They're different markets, different locations, and it's not just China. You find those differences between New York and Florida. Yeah, so that's why there's a price difference. Also, you saw this thing in China. There, people are saying in China, and they're also, like a couple of weeks ago, oh my God, silver investment products are $130 an ounce in Tokyo. Yeah, that was one specific form of silver investment product that was like a 10-gram thing that was highly popular in Japan, and dealers were running short of it. If you wanted a different investment product, you were paying prices much closer to regular retail prices. Yeah. You got to be very careful about who's telling you all this stuff. Now, I'm sorry about all this text, and I'm afraid that some of it's going to get cut off by my picture when we process this. But, there's a related question. And these people seem to be having real troubles understanding that, again, a backwardation, and I highlighted it here, he said, you have not explained what would constitute a backwardation according to your definition. Well, I'm sorry, excuse me, I have repeatedly explained what a backwardation is, not according to my definition, but according to the market's definition. Look it up in a dictionary, unless you're too lazy, right? The reality, we've got a backwardation because Kitco right now is trading, this was from January 9th, $79.84, but the March futures was $79.34. So clearly there's a 50-cent increase in Kitco's price relative to the March futures, before you take into account that the Kitco price is a spot price and March is a futures price. So you've got a time spread there. You've got the cost of money for 2 months. That's not a backwardation. That's a difference between the Kitco market, which is an individual refinery in Quebec, and it's their quote for spot metal at small units. I think I don't know how low you can go with Kitco, versus a wholesale market that the whole world trades on in 5,000 ounce units. That's not a backwardation, and it's not my definition. You just don't know what a backwardation is, and you refuse to learn. Spot prices vary differently. They're very active from actively traded months. That's why CPM Group and other knowledgeable market research operations and participants tend to quote the nearby active contracts as opposed to the spot prices. Spot prices, they have a lot of stuff going on, interbank trading and physical transactions that cause them to be different from the nearby active. We also caution investors to question which spot price you're looking at. Dealers will say, well, I'm going to buy or sell, at a discount to spot, or at a low price or at spot. Which spot price are they talking about? Are they talking about London spot, which is the wholesale price? Are they talking about a spot dealer price in New York, or a spot dealer price in Shanghai, or a spot dealer price in Phoenix? Are they talking about their own spot price? Are they talking about a 5,000 ounce unit spot price on the Comex? Which spot price are you talking about? We've told people repeatedly, hey, you got to watch out for that. And this guy, he gets it off of the internet, a Google AI search. Now, 80% of the AI results are inaccurate. I would say, think about a world where everyone is making these decisions based on 80% inaccurate information. But I don't have to say that, because that's where we are today. If you're relying on AI, sorry. Now, somebody else wrote, so a couple of people wrote, because I mentioned yesterday or earlier video, I mentioned that two of the largest solar panel manufacturers in the world, in China, have announced that they're moving from silver to copper. One of them announced it 2 weeks ago and said, we will be not using silver in the second quarter. So in 3 months, we can make this transition from silver to copper. And a lot of people say, wow, CPM Group, you don't know jack about silver use in solar panels. This can't be done. I'm just going to say this. We were merely reporting what two of the largest manufacturers in the world were saying, that they were going to substitute copper for silver. Now, those guys, they got hundreds of scientists and engineers working on stuff. They got research and development departments that spend probably tens of millions of dollars a year researching metals use and metals substitution and metals reduction and all kinds of other stuff. But perhaps the people who said, hey, CPM, you don't know jack about solar panels, know more than two of the largest solar panel manufacturers in the world. And maybe they should find those manufacturers in China and say, hey, you guys, you don't know what you're doing. I know better than you. You can't do that. Don't listen to your research department. Don't listen to your engineers. Don't pay attention to the results that you have from testing solar panels using copper instead of silver. Believe me, you can't do it. I had a guy, actually, it was a female person, a few years ago who was on a panel with me, and I mentioned solar panel recycling. And she insisted that it wasn't happening, that it couldn't happen, that you can't recover silver from solar panels. And I said, I'm going to have to tell some of my clients, because we have several scrap refiners, processors, who are recovering silver from solar panels. And when you go to see their factory, their refinery, they've got stacks of end of life and mismade solar panels sitting there waiting to have the silver removed from them in a refining process. What do those guys who are doing business and making a lot of money know or not know that somebody sitting there watching my video knows? Now, this one was weird because he said, I only speak about what's going on in the myriad of investor paper products. But then he shows his hand and he says that it's a fact that paper prices have been manipulated, which is bullshit, for want of a better word. They've been spoofed. But this guy just gives it away. Now, I don't know what videos you've been watching, but most of what we talk about is the physical markets in greater detail with more accurate data and information than any other source. This is our annual Silver Yearbook. It's 250 pages. It's almost exclusively physical metal information. So I don't know what videos you're watching or if you're like doing something else while they're on. But if you don't think we talk about physical metals, you're missing something. Second, you have been misled by this enormous industrial demand for physical silver. Yeah, there's 800, 900 million ounces of silver being used in manufacturing products. But there's a lot of gunk out there talking about how solar panels are going to be using 800 million ounces and they're already using 400 million ounces. And there's the military stuff, which I'll get back to in a second. Third, there's no gulf between of any consequence between the physical and the paper prices. The difference that you see between physical prices and paper prices are what I've been talking about. Difference in markets, difference in sizes, retail versus wholesale. Are you buying 5,000 ounces of good delivery metal in a depository that everybody in the world respects? Or are you buying 1 ounce from a guy in a coin dealer shop in any place in the world? If you normalize your pricing between wholesale, retail, location, etc., taxes, non-taxed, after tax. If you take into account all of those things, there's no big gulf in the difference between paper and physical prices. And if you believe it, you just haven't done the math. And it's not even math, it's arithmetic. Fourth, the alleged inevitable price reset is exactly that. It's alleged. It's a marketing hogwash aimed at gullible investors. What is a price reset? From what I can tell, the price gets reset every minute in the world market. The fact that folks swallow hogwash like that and drink it down like honey is the elephant in the room. Sorry, Jeff, but get on the right side. Now, selective comprehension is a terrible disease. This is a response to several people who said that CPM Group said silver would never reach $50 per ounce. We never said that. In fact, we've repeatedly said that it would, and it could. What we have said is it cannot stay above $50 for an extended period of time because the economics of mine production, secondary supply, fabrication demand, and investment demand will bring enormous increases in supply and reductions in demand at prices over $50. And you can say, I can say, well, look at what happened in 1980, look at what happened in 2011, and you'll say, oh, but this is different. It's different because you're believing a bunch of myths. You're believing that solar power uses 5 times what it actually uses. You're believing that military uses 10 times what it is. You're believing that inventories are very low, that there isn't any metal left to be mined. We've heard all of this gunk for years. Selective comprehension is a terrible disease. And it's one that a lot of sufferers never get cured. Now, this guy also compared me to little Mikey Maloney. I revel in the comparison to someone who has been saying for his entire career, over several decades, that silver would rise to $100 or higher momentarily. It was going to happen in 2008 when he started. It was going to happen in 2020. It was going to happen tomorrow and stay there forever. That you'd be able to buy a house with 3 ounces of silver by 2009. He's been wrong all of his life. We have the best track record calling silver, gold, platinum, palladium, copper prices in the world since 1980, when we started keeping track of our record, of our price projections. And we've done videos that show you that. I revel at the comparison of someone as bad at calling silver prices as that. Thank you very much. Now, here is a price forecast from our long-term outlook report in December 2017. You can see the cover right there is about 220-page report, which had hundreds of deposits and mines listed, among other things. All kinds of physical stuff, I'm sorry. And these are our silver prices. I blocked out the stuff after 2026, after a certain period of time. But you can see that we were projecting the annual average silver price to reach above $40 by 2026. The price averaged $40 last year. So when you say that we've said that the price would never reach $50, you clearly don't know what you're talking about. You clearly don't know anything about us. You clearly don't know that when the price reached $50 in 1980, the average price that year was $21. And when it reached $50 in 2011, the average price was something like $34. So for us to say that the average price would reach $45, $46 by 2026, we would have to see silver prices over $50. There's this putz, Peter Grandage. And in 2011 or so, our long-term outlook for gold, the gold price had gotten up to like $1,900. It had come down. It was trading, I think, around $1,600 at the time. Our long-term projection was that the price would go over $2,000 within the next 10 years, which it did, historically. And we also said that we would not see the gold price below $1,000 ever again. Grandage, in his newsletter or someplace, maybe he was just standing on a corner screaming in Toronto, said that he would bet me $1 million that the gold price would break over $2,000 before it broke below $1,000. And someone, sent me this note that Grandage had said that. And I said, well, that's interesting because our projection is that the price isn't going to below $1,000 and it is going over $2,000. So for me to take that bet, I would have to bet against my own research and price conclusions. And I'm not going to do that. And the fool never apologized. And he's out there now pontificating about the metals. Bozhe moi. That's Russian for my God. Okay, things we don't actually need to worry about. This guy said, you have to worry about spending on defense in the top 10 countries militarily, and BRICS and their plan to de-dollarize. Okay, on military spending, and we've written about this, and we've talked about this in videos. U.S. military spends more than the next 10 countries. Much of the silver used in military applications is consumed in the U.S. military. Most of the silver that's used by non-U.S. military applications is used actually in the United States by the U.S. military and its contractors manufacturing armaments and other things that are sold to foreign militaries. The United States military industrial complex sells and exports more arms and military equipment than any other country in the world. And all of that stuff that has silver in it, and there's not a lot, generally gets manufactured in the United States, except the stuff that's used in Iran, and actually some of that gets manufactured in the U.S. and smuggled out. Russia, China, and a few other countries that don't really trade military stuff with us. And Russia and China, by the way, are two of the other top 5 exporters of military goods. The second thing is the BRICS have repeatedly stated that they, in writing at their meetings and in reports, that they are not interested in de-dollarization. Putin is, but the Russian central bank says they're not. Putin's a lonely guy. He's only got like gold and silver hucksters as friends in this matter. So I don't think we actually need to worry about either of those. And we've addressed them repeatedly in earlier things. But again, maybe you weren't like actually watching us. This guy said, so you claim there's no platinum shortage. I'll just be very brief. How much do you want? We can secure as much platinum as you want. And don't say, oh yeah, but at what price? If there's a shortage, if there's a real shortage, price doesn't matter. We have a history and a reputation, extending back to the 80s, of securing large volumes of platinum and other metals for our clients, institutional investors, fabricators, in some cases, actually producers who had contractual obligations to deliver metal that they couldn't produce. So they had to buy in the spot market, deliver into their contracts while they fixed their mines. We have a good reputation extending over 45 years of securing large volumes of precious metals without driving the price higher and selling them without driving the prices lower. When we did the business plan for the U.S. Mint's Platinum Eagle in the 1990s, and we did the procurement plan. We generated around $3 million in profits for the U.S. Mint procuring the platinum for the Platinum Eagle program. It got all kinds of awards. It turned a net profit, even though it lost money making and selling the Platinum Eagles. We can do the same for you, assuming you really want platinum. If you think there's a platinum shortage, you tell me how much you want to buy. We'll buy it for you. And we'll only charge you a small consulting fee. Now, I've gone on a long time, sorry, but I get tired of buffoons. I've always said, I have no understanding what this line means, to suffer fools lightly. I do not suffer fools lightly. The next open forum was going to be next week, but one of the CPM Group staff has a personal matters they have to take care of. So we're rolling that to January 29th. It's a next Thursday, a couple weeks from now. And anybody who has registered for the open forum, they'll be automatically registered for the 29th of January forum. Apologize for that, but things happen. And then we have our yearbooks coming up in March, May, July. I mentioned it earlier. You can go to our website and download this report, Gold and Silver Renaissance 25 Years On, What Happens Next. That talks to you about what we've been saying in terms of our bullish outlook for gold and silver over the last quarter century. going back to the year 2000. And you can find out why we've been bullish for the last 25 years and why we're bullish for the next 25 years. And you can go to our website, you can buy our books, you can read about other stuff. There's all kinds of free reads and videos there. You can send us an email at info@cpmgroup.com and say, I want to talk to CPM Group and get on the right side of this market. Now, I apologize to the tens of thousands of people who actually watch these videos and know this stuff. I'm playing to the galleys here. There's 100 people who write stupid stuff. And I know you're not supposed to look at it, but I do. Everybody looks at the stupid stuff. Take care. Take care of yourself. Take care of those around you. Try to do something good for the world. If you really want to be interesting, go find online the shareholder video conference that Palantir did late last year, in which they talked about, among other things, killing everybody that they don't like, working with the military and the government to know everything about everybody, and the wisdom of securing Greenland as a place where wealthy people with fascist and Nazi sentiments can create a new community to protect themselves from the rest of the world. Pretty interesting watching it over the weekend. Take care of yourself. Take care of those around you. Do something good for the world. We'll talk to you next week.